Welcome back. We're going to do another current events. This is going to focus on the week that ended on Friday, the 15th of May. Now, there were a lot of things that happened last week. The Italian government approved its new stimulus decree, which adds another 55 billion into the mix in terms of promoting economic performance in Italy, and we could have talked about that. The ESM Board of Governors approved the term sheets for their new pandemic support line. And we could probably have talked about that as well. The spread between Italian and German bonds seems to have stabilized at around 240 basis points, a little up and a little down, but the volatility has been extracted out of the markets, at least for now, so that might be another thing. But to be perfectly honest, the most interesting story remains this ongoing debate about the German Constitutional Court ruling and this justice who penned the decision, Peter Huber, who's on the left of your screen right now, gave an interview that was very prominently displayed in the Frankfurter Allgemeine Zeitung, where he basically dug his heels in and said there's no way they're going to back down, and it's time for Europe's politicians to start taking this seriously. And I thought that's a good segue for us to focus on central bank independence, because what we're not talking about in the context of this German Constitutional Court ruling is why the European Central Bank is politically independent in the first place, and why it's governed by the rules that it is. Now, what I propose is that we do this in a kind of a sequential manner, building up a story that starts with why the ECB is politically independent, or why any central bank would be politically independent, and then goes to whether that political independence is in any way necessary for the ECB to respond to the current crisis that we're facing in European macroeconomic performance. We might look at the alternatives to political independence. What would it look like if the ECB were not constituted the way it is? We'll ask, obviously, whether those alternatives are realistic and what the likelihood might be attached to them. And the answer is going to be no and very low. But we have to ask that question anyway. And then we'll get to the heart of the matter, which is what are the implications of muddling through? What if we just sort of pretend this isn't a problem and hide from discussing it, right? The elephant in the room. Then what are we likely to face at the end of the day? Well, why is the ECB politically independent? I think we could break it up into 5 different lines of argument. One is just the classical argument for time inconsistency. And the argument there is that if you give central banks independence to set monetary policy, then they'll set monetary policy looking at the longer term. If you leave the control over monetary policy instruments in the hands of politicians, then they'll focus on the shorter term. And focusing on the shorter term means essentially either opportunistically creating economic activity in the run-up to an election and then deflating the economy once the elections have taken place so that they can make people feel good and then cure the damage that they've created. Or you could think about it in a partisan fashion where the right-wing governments all ensure that prices are stable even if unemployment is high, and the left-wing governments all ensure that unemployment is low even if that means accelerating inflation. And the classical argument is that either of these tendencies, the opportunistic or the partisan tendency, tend to undermine macroeconomic performance over the long run, and as they get built into the expectations of financial market participants. So it's always better to give it to some independent actor who's not subject to either of these two political calculuses and will focus on the longer term instead. A second argument has to do with the commitment to price stability. This is most famously associated with a guy called Ken Rogoff. And the Rogoff central banker is somebody who is more prone to support price stability than the average person in the marketplace. And once the average person in the marketplace knows that this very conservative central banker is in power and that politicians are not going to interfere with the conduct of monetary policy under the central banker's mandate, then market expectations will gravitate toward that price stability expectation, and that will make prices stable as a consequence, right? So there's some logic to that, and you could run the the time inconsistency and the commitment signaling device arguments together, and they often do get run together in the macroeconomic literature. There's a third argument that comes from the epistemic community literature, which is that central bankers all think alike. Juliet Johnson has a wonderful phrase for this. She says they live as a wormhole community. Wormholes being like those things that allow you to travel faster than time. They're all so tightly connected together. And that tight connection, the fact that they all agree on the same models and instrument settings and all the rest, gives them a certain technocratic legitimacy. And we shouldn't interfere with them because those of us who are not central bankers would just screw things up. They really know what they're doing. That third argument sort of runs into but doesn't quite equal the fourth argument, which is the preference argument for intergovernmental bargaining. And this is an argument that comes out of the literature that looked at the negotiation of the Maastricht Treaty and the creation of Europe's economic and monetary union and said, look, they had to create a politically independent central bank, despite the fact that the French would have liked to have seen more economic governance in quotation mark, because the Germans were the most powerful actors in the negotiations, and the Germans wanted it to be that way. So whatever the logic behind central bank independence, and there's a guy named Adam Posen, who's the president of the Peterson Institute, who won this big prize in 1994, the American Express Essay Prize, for an argument that basically said that it wasn't political independence that resulted in price stability in Germany. It was the closeness of the German Bundesbank with the German finance community that resulted in price stability. So we can debate whether any of those three first explanations have anything to do with German preferences in that sense. But the fact is, we wouldn't debate that the Germans do prefer to see politically independent central banks, of course, except in the current situation where they would prefer to see them under some kind of political supervision. So we don't want to get too ironic. The preference argument is, I think, a strong one. And then there's the political argument for not reopening the treaties, right? Nobody wants to reopen the treaties that frame what the European Central Bank does, because if you reopen the treaties, then who knows what's going to happen. This is an argument that was made to me already in the 1990s by a former French finance minister and prime minister, and prior to that, a European commissioner, a guy called Raymond Barre. And Barre said, we'll never open up these treaties again because we're not sure we'll ever get them closed if we open them. And so why is the ECB politically independent? Because nobody wants to change anything because they're afraid of what change may bring. Well, is that independence important for the ECB's policy response right now? I think the short answer to that one is no. I don't really see a time inconsistency dilemma that we face at the moment. On the contrary, I see them throwing everything at this problem, including the kitchen sink. And I think politicians could do that as well. It might be nice, in fact, if politicians were to take responsibility for those actions. I don't see epistemic community coming into play here, because I don't think central bankers even now agree on the full implications of the policies that they're doing. The Rogoff central banker, I don't think we're worried about setting inflation expectations at the moment. So for the first three things, why are we doing this? We're doing it because the Germans want it and because we're afraid of treaty revisions. But the Germans don't want political independence if it gives us the policies that we're getting. So the bottom line is political independence is now become very controversial. So that's why I don't think political independence is necessary for the response. And that's the short version of the answer. The longer version of the answer is that this political independence may be counterproductive, right? First, think about it. The ECB needs governments to provide guarantees so that banks can lend, right? All this effort that they're doing to extend subsidized credit through longer-term refinancing operations only counts if there's somebody on the other side of the transaction, right? I mean, banks can receive the liquidity, but they're not going to be able to hand it off if they don't trust the people who are going to borrow the money, and they're not going to trust the people who are going to borrow the money if the governments are not out there providing guarantees, right? So we need some way to make sure that the central banks banks and the governments are working hand in glove in that respect. The ECB also needs governments to stimulate aggregate demand through direct spending. And they've been saying this repeatedly, not just in the context of this crisis, but during the struggles over the last summer to get price inflation up to norms, right? And in that sense, we need to match to monetary policy efforts a fiscal policy that works at the same scale and timing. And what that suggests is that we need coordination rather than political independence. And the idea that fiscal policymakers are going to accept coordination defined by monetary policymakers who are politically independent is crazy, right? So insisting on the political independence of these monetary policymakers is actually preventing us from having a more effective and a more accountable and responsible fiscal policy, I would argue. And most important, over the longer term, I think this is going to be counterproductive for the ECB because the ECB needs political cover for many of the difficult decisions that it has made and will have to make about who wins and who loses from the policy response, not just in responding to the crisis, but in unwinding that response later on. Right? Because to say, well, this is just the fault of the ECB is going to be to attract, just like bees to honey, it's going to be to attract criticism and political controversy to the ECB that the ECB is not constitutionally well designed to resist. And I think it's important for us to remember that because we are hurting the institution by leaving it so exposed as the leading institution in responding to this crisis. So what are the alternatives? Well, I think the first thing that we should do is reject the idea that there are no alternatives, that we can never open up the treaties, that we can never reconsider, right? The logic of political independence. Remember, political independence of central banks is not like the separation of constitutional powers. It's not like giving political independence to the judiciary. It's about improving the quality of policy making. So if you've got to cross the streams like they did in Ghostbusters at the end, right, then you got to cross the streams, right? There are no hard and fast rules on the political independence of central banking. And I hope I didn't just spoil the very first Ghostbusters for you. But I think it's important when the Stay Puft Marshmallow Man is coming that you know what is required at the end of the day. The question is, do we want to get rid of the political independence of the ECB and of central banks more generally, full stop, or do we just want to take a pause, right? And I would argue that we just need to take a pause until we get back to something that looks much more like normal macroeconomic conditions. We've unwound all these complicated instruments and made all the adjustments necessary. And then we can say to the monetary policymakers, okay, guys, or gals, or whoever you are, right? Now you're responsible, have at it, right? But for right now, it's not a good time for them to be politically independent. Right now, what they really need is political cover and direction to help with the coordination with fiscal instruments. And they also need pressure to be on politicians to ensure that those fiscal instruments exist and are deployed effectively. And yet, if we believe that that's true and we want to make a pause, the other question is how do we figure out what the pause should look like and what triggers it, right? Are there strict rules? Do we need to create a new mechanism for discretion? Can anybody just jump in and say, oh, it's a crisis? I think we need to take control over the levers of monetary policymaking, or is there some kind of middle road? Now, in an article I published with Matthias Matthijs in the Journal of Democracy about a year ago, what we argued was that there is a middle of the road, and that is when the monetary transmission mechanism is broken, when financial markets are disintegrating, and the ECB needs to take extraordinary action in order to restore the integrity of the monetary transmission mechanism and the monetary union, that's probably a good sign that something really strange is going on where politics needs to be brought into play. So we should probably have that be the trigger. Anytime the ECB comes out and says, we absolutely have to do this very unusual thing because otherwise the monetary policy transmission mechanism will break, that should be the signal that we need to have some kind of political deliberation about how and why we need to repair the monetary transmission mechanism in this way. And that provides the pause, I think, for reflection that could then be fixed once the monetary transmission mechanism operates independently, right? Now, is this alternative realistic? I mean, come on. Of course, the answer is always no if you don't ask the question, right? I've got this picture of Wolfgang Schäuble and Mario Draghi, one of my favorite pictures from the last crisis or its aftermath, as Schäuble is clearly grumpy about what Draghi had managed to accomplish during his tenure as president of the ECB. Either that or he's just looking at something else and we don't know what it is, right? But the fact of the matter is it tells a great story. And within that story, I think it's unlikely that we're going to get an intergovernmental conference right now where we open up the treaties and try to fix everything while we're just trying to keep the economy from tanking, right? So I don't think it's necessarily all that realistic. Nevertheless, I think it's worth making the argument, right? Because I doubt we're going to get a more effective political union at the European level or a new consensus that political control over monetary policy is acceptable in times of crisis. But after this crisis is passed, I think we will need to have that conversation. We'll need to make sure we're better prepared for the next crisis than we were for this one, particularly if the next crisis comes as quickly on the heels of this crisis as this crisis came on the last, right? And the reason that I want to underscore that is because I think the complacency attached to the idea of muddling through is deeply, deeply, deeply misguided. Why? Well, isn't muddling through like a European tradition? A lot of my friends who study European integration will insist that muddling through is how we always get through these crises. But remember, muddling through is also how the ECB became so overextended in the first place. And a lot of the problem that the German Constitutional Court was reacting to in its 5 May decision was problems associated with the monetary policy decisions that had been made in September of 2019. In other words, before the coronavirus crisis had even started, right? As a matter of fact, the whole judgment reflects on the last crisis, not on the current crisis. The forward-looking aspect of the judgment is only in terms of what it implies for what the German government should do from now, right? And not only did muddling through get the ECB overextended, it also brought the political independence or the legitimacy of that independence into question. That's why I put this picture of this young woman who's scattering sprinkles all over Mario Draghi in a way that must have scared about 10 years off of his life. The fact of the matter is that anyone would go and disrupt a monetary policy press conference tells you that something really bad is going on, right? Because usually those press conferences are dull as dishwater, and clearly this was a lot more exciting than monetary policy press conferences should be. So muddling through not only got the ECB overextended, it also attracted a lot of negative attention. So if we keep muddling through, we shouldn't be surprised if bad things happen, both in terms of the balance sheet of the central bank and the other instruments that it deploys, and in terms of the politics that surrounds all of this. And in that sense, I think I actually agree with Peter Huber, the German Constitutional Court judge, when he said that this decision is a wake-up call. It's a wake-up call, and we had better listen to the alarm bells ringing, or we may miss our chance to act, which is not to say we should act right now, but we should be ready to act as soon as we get enough breathing space to make that happen. And that's where this conversation comes to an end, right? What I want you guys to do is to keep an eye on this debate about the German Constitutional Court decision, about the political independence of the ECB, both as a form of politicization and as a possible constraint on policy action. Because if I'm right that being politically independent is actually counterproductive, we'll see that counterproductive nature express itself more and more as the ECB gets ever deeper in or ever more overextended in terms of its balance sheet and the different programs, asset purchase programs and long-term refinancing operations that it has underway, right? Keep also an eye on the tone of the rhetoric. And what struck me is that the German court judge, Peter Huber, complained at the start of his interview in the Frankfurter Allgemeine Zeitung about the tenor of the reaction to his court case. And I'm not surprised. A lot of people said a lot of really strong things. But come on, let's face it. I know central bank governors that faced death threats, right? This magazine that you see right here is about, it's got Mario Draghi in the background and Boštjan Yazbec in the foreground. And the whole idea is that these are central bank governors who have come into Slovenia to steal everybody's money and to destroy their banking system. And Boštjan Yazbec actually faced death threats that in the end forced him to leave office early, and he was not alone in that respect. So I think Judge Huber is right to complain about the tone of the rhetoric, but let's just remember it could get a lot worse, right? And it's likely to get a lot worse as the ECB gets ever further overextended, and that's before we start to experience the financial phase of this crisis, right? Because we're only at the beginning of the beginning, right? In the sense that, we're just getting out of the lockdown. We still don't know how much money governments are going to have to throw at this problem. We're still not clear how deep the macroeconomic impact is going to be. And as this crisis grinds up the real economy, the banks will not be far behind. And when the banks get into trouble, I think politicians are going to have to swing into action even more decisively, as will the central banking community. And we're going to have to look at how that financial phase of the crisis affects public opinion and attitudes toward central bank independence, because I think things could change quite dramatically. So watch this space. Thanks a lot.